Welcome. I'm Catherine Magana, aka Superwoman, here today with Steve Wolf, Greg Carroll, and Vince Stefano.
Do we have AKAs or no?
Today we do.
We didn't dress properly.
And just kind of we're here to talk about the markets and investing and planning. But before we jump into that, I just want to share that the Dodgers won the World Series. I was a Dodger fan growing up. I did convert to the Padres, but now that they won the World Series, I'm a Dodger fan again.
Oh, bandwagon.
So I like loyalty.
Exactly. And then my theory was, I thought I was going to go 7 games. I was just sharing with you guys yesterday. I was like, they always seem like it always goes 7 games, but I don't know. I guess my theory about this was wrong.
Blew that one out of the water.
Exactly. All right. So as we reflect from last week, so today is October 31st. As we look back on the last week, kind of looking at the markets, not factoring in today because the markets are down right now, but we'll see where we close. But from last week to the close of October 30th, the Dow Jones was down a little bit. The NASDAQ, the S&P, and the Russell 2000 were actually all up. But after today, depending where we close, if we do close down, it looks like the Dow Jones will be down since last week, and the NASDAQ and the Russell 2000 will be flat, and the S&P will be down about 1%. So even though we're seeing a lot of fluctuation this last week, it really isn't kind of as bad as we think, but just obviously we don't like the markets to go down. And so also the other thing we're looking at is the Fed and them coming out with a change. We're, based on the GDP numbers that just came out, it looks like it came out a little less than expected at 2.8%. But it does look like potentially there is going to be another rate cut next week of 25 basis points, but we'll see.
Well, interestingly, the CNN Fear and Greed Index is down to neutral. And actually is almost in fear territory at 47. So, we follow this week by week, and it just seems like the index has moved more than I thought it would that would move more. Yeah.
Say that 10 times real fast.
Talk about word salad. But another interesting thing here is, and this has really very little to do with investing, but it's kind of fun, and that there are betting polls on who's going to win the election. And since we've been talking about the election forever, and we see millions of ads and everything else, it's kind of interesting to see where the bets are going. And up until about, I'm going to say 2 months ago, 3 months ago, when Biden was still in it, it was heavily favored for Trump. Then Harris got in it, and she actually took the lead, and now it's moving the other way. Now, this isn't a prediction on who's going to win, because these are betting odds. I've seen a lot of betting odds in sports that it doesn't predict who's going to win. It just has a spread. So be interesting, though, for those people who are betting their investing on who's going to win the election. They might pay attention to this. Otherwise, it's just for fun.
Well, it's funny. We all get calls from clients and saying who's going to win if this person wins. The market and the economy is going to hell in a handbasket. And I was at a meeting the other day with Goldman Sachs, and they did a study since 1953. If you only invested when the Democrats were in charge, a $10,000 investment grew to $260,000. Not too bad. When it's a Republican presidency, and you only invested when the Republicans are in office, that $10,000 only grew to $83,000. But the key is if you just stay invested, you blow both of those out of the water. Your $10,000 is $2.2 million. So people get so worked up sometimes about elections, and they just don't affect things that much. So the key there is stay.
Well, as far as you're talking about, as far as the stock market.
The stock market, yes.
Right.
It was kind of funny. Yesterday, I was on Fox Business. There was, I want to say, Nicholas Mutual Funds. Is that a mutual fund group?
Could be.
I don't know. Anyway, this guy Nicholas was out there talking about the Trump trade and the Harris trade.
Oh, okay.
And if you look at the Trump trade, it's technology, defense, pharma, and crypto. If you look at the Harris trade, it's infrastructure, renewables, healthcare, and cannabis. There you go. It's kind of interesting.
There you go.
I don't know what that means. I'm not changing. I'm not changing my investment philosophy because of that. But we do have 5 days to the market, and as Catherine said earlier, we're having a pretty good sell-off today, and part of it's obviously the mega cap stocks. Microsoft. I'm not making any recommendations. I'm not making any projections not to buy or sell anything. But I've been saying all along I wanted to see what some of the mega cap stocks are going to do in the quarter ending September. Most came in beating top and bottom line, but their guidance was a little bit on the light side. Unfortunately, they've sold off very aggressively today. The algos, the momentum investors are...
Algos, you're talking about the algorithms?
The algorithms, yeah. The algorithms, the momentum investors are selling them off. But what's interesting on the flip side, I've not seen any sell-side firms downgrade the stocks today. Most analysts are remaining very optimistic long-term on these names. And also, you're speaking about some of the most dominant, most well-run companies in the world with superior products and services. So think about, these kinds of companies when they do sell off. So when you think about where you want to be invested going forward, keep an eye on a lot of these technology companies. And as they begin to sell off, and you may see a sell-off between now and the election, but they report tonight, and they are market-moving names. Watch the prices over the next few days, and you may want to call your financial advisor and either, if you have existing positions, may add to it. If you don't have positions, maybe you want to initiate small positions. And if your investment advisor tells you to stay in money market funds and CDs, call me, Vince Stefano, at WWM Financial, 760-692-5197, and I will put together a wonderful growth portfolio for you.
Well, it's interesting you mentioned a few stocks, but you can also invest those in exchange-traded funds, which are also known as ETFs, or mutual funds. So you may already own some of these positions in these other investments as you're sharing that.
Yeah, that's always a good idea, is to look and see what the weightings are in a lot of the different investments you might own already. So you might not be missing the boat like your friends say you are if you don't own them directly. But that's also this time of the year we do a lot of year-end planning. You should be talking to your advisor about tax loss harvesting, maybe where you have some losses that you want to realize to offset maybe some gains you have taken throughout the year. So, repositioning your portfolios, rebalancing your portfolios. It's always a good time to sit down, not only with your financial advisor, but your CPA to see where you're at.
What's interesting, we are doing a lot of year-end planning now as we're kind of finishing up this year. I actually talked with a client yesterday that she's in Maui on a retreat, and they go there for business and personally. And so we revisited her financial plan, and I was like, Maui, I want to go to Maui for a business retreat. But needless to say, it gave her a chance.
You could just fly there.
I could just go today. And so, but needless to say, we were really focusing on her finances and kind of reestablishing her goals and making sure everything's in line going forward. And one of the things that came up was, as you mentioned, Vince, some CDs or cash. She did have a CD that just came due, so we looked at the plan to figure out what was a good place to invest some of that money for her. So if you do have CDs, which a lot of investors did put money aside, extra money than usual, it is important to kind of revisit and see, especially as rates are changing, if there's other things that are out there.
Because rates were, 5+%, and now they're coming down very dramatically.
So you're looking a little over 4.
And the question is whether they will continue to do that. We don't know. We're coming out with numbers where the economy was actually a little bit stronger than people thought. So who knows? We've said this a million times. Nobody really knows what's going to happen. In hindsight, everyone says, "Oh yeah, I knew that was going to be the case," but usually that's not.
I think a lot of people were surprised after the Fed lowered their interest rate environment by 50 basis points, but the bond market, 10-year bonds, went up 50 basis points.
There's a lot of things going on right now, and the election is part of it. As much as we say don't think about it, we do, and we factor that into perhaps how we, meaning the general public, factors that into what they're going to do. And if you're confused about it, and I know Vince was kidding a little bit about it, but if you're confused, give us a holler. You can contact us at WWM Financial or If you've got another advisor, which of course we strongly suggest you come to us, but if you have another advisor, talk to them.
And then another thing that's been coming up recently is having discussions to make sure that you've maxed out your 401k. So if you have to make any adjustments, you want to do that now before the end of the year. And so if you're still working and you have the salary deferral for 2024, you could put $23,000 away. And if you're over the age 50, you can put an additional $7,500. So this is just a good time to make sure, where am I at with some of my contributions? And then we've also been having conversations about kind of charitable giving, and everybody's at a different place and in the ways that they give. But it does come up, and not only charitable gifting, but also gifting to kids. And so going over the charitable gifting, we are, Carrie and Naomi here are following up and making sure all the required minimum distributions are done for our clients. So if you haven't done it, this is definitely something we want to get done before the end of the year. But with that, we have a lot of our clients that also do qualified charitable distributions, known as QCDs. And so that's something we're here to walk through and help you with if you have any questions. And so once again, going back then to not only there's charity, but there's also gifting. So Steve and I recently had a conversation with a client that, it's important to them. They wanted to start gifting to their kids now. So we looked at the financial plan to see, okay, what's the impact of gifting now a little bit, and making sure we're within the contribution limits or the gifting limits. So there's some planning and things we look at, but once again, it's case by case and it's each individual. But these are the types of conversations that are coming up. And when you look at kind of the gifting, if the gift is under $17,000, there's no gift tax return, and if you're married, you can do $34,000 to each person you want to gift. So, something to think about.
Let's see, and if you have no one to gift to,
You can give it to me.
Vince Stefano at WWM Financial.
Call me, Vince Stefano.
And then I can go to Maui. Just kidding. Just kidding.
all right. Anything
I think
else?
we should do one of these in Maui.
There you go.
We could move all this. We just fly out there for a little retreat.
Well, we have our business planning meeting in December, so maybe not this year, but maybe next year.
All right, let's do it.
Anything else we've got for this week?
I think
Then
that's a wrap.
that kind of wraps it up. We'll see what happens. By this time next week, we will know who we think. Who is the new
Maybe.
president? Well, fingers crossed.
Maybe.
Fingers crossed. I'll tell you what, both sides are lawyering up like you can't
Like you would not believe.
So who knows? It could be a landslide by one side or the other, or it could be razor thin, and all of a sudden you're going to see lawsuit after lawsuit after lawsuit.
I would love to have like an ETF on big law firms right around the election, because you can buy that ETF and make a fortune.
Well, I'll tell you, with all the ads that are out there,
Oh, that too.
you would think that some of the media companies would be doing great. I don't know if they are, they're not, but they should be.
They're really not. Well,
They're not?
They're not.
No. I would think that a lot of the TV, radio, maybe even podcasts are making money. I mean, Joe Rogan, I heard that he's got something like 16 million listeners.
Wow.
That's about what we have.
Well, we will.
We're approaching that number, aren't we?
We will, but that is an amazingly high number. If that were a TV show, it would be one of the highest rated shows in the world.
Wow.
So, maybe we will, Vince. As soon as everybody calls you and gives you their money,
That's right. We can all go to Maui,
There you go.
All right.
or Puerto Vallarta.
Well, hopefully by this time next week, we'll know who won the election, and we can get that in our rearview mirror, which I will be glad to do, and we can start really focusing on earnings. So until then, we'll see you guys. Take care.
Thank you.
Please stay tuned for important regulatory disclosures. WWM Financial is an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry and how we may be able to assist. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. As always, please remember, investing involves risk and possible loss of principal capital. Tax considerations presented may not be appropriate for every individual circumstance. A tax professional should be consulted before making any decisions about your tax liability.